For Canadian farmers growing special crops, wow, the last few years have been a real boom time. We're talking record high prices. But what if I told you that party is about to come to a screeching halt? Today, we're going to dive into some really compelling analysis that points to a major market crash right on the horizon.
It seems completely backwards, right? I mean, when prices are high, you expect the good times to just keep on rolling. But that is the big question we're tackling here. Why are two very different market experts looking at the exact same situation, both forecasting a sharp and pretty painful downturn?
Yeah, the message seems to be pretty clear. A perfect storm of factors is lining up, and it's creating the ideal conditions for a significant bear market. And look, we're not just talking about some minor correction here. The signals are pointing to something way more severe.
So how did we get here? Well, what's so fascinating is that we have two different schools of thought, two completely different ways of looking at the market, and yet they both landed on the exact same pretty grim forecast. It's kind of like two detectives starting from totally different places and somehow ending up at the exact same crime scene.
So, let's meet our two detectives. One of them works from the screen, analyzing the digital fingerprints of the market. And the other? The other one works in the field, gathering real-world evidence straight from the source.
So on one hand, we've got Trent Klarenbach. He's our technical analyst. He lives and breathes charts, patterns, moving averages, everything you see on the screen. Then, on the other hand, you've got David Nobbs, our fundamental analyst. He's all about the field. Supply, demand, and good old-fashioned boots-on-the-ground intelligence.
So Trent's whole approach is to take that same disciplined chart analysis that traders use for stocks and currencies and apply it to things like lentils and peas. He's a believer that the patterns in the charts, well, they tell a story about where prices are headed, no matter what you're trading.
David's method, it couldn't be more different. He literally gets in his car and drives thousands of kilometers across the prairies, physically counting fields to get hard data on what farmers are planting. He doesn't just trust the official estimates. Nope. He wants to see the acreage with his own two eyes. All right, now this is where these two worlds collide in a big way. Let's open the case file on Large Green Lentils and see exactly how both the screen and the field are sounding the exact same alarm.
So this right here, this is the bombshell from David Nobbs' field analysis. His 2,700 field count showed a staggering 30% year-over-year increase in large green lentil acreage. Now think about this. Official sources were saying it was up maybe 4%. But David saw that farmers, chasing last year's amazing prices, had planted way more.
And that leads us to the core problem from the fundamental side. A 30% jump in acreage, you combine that with good yields, and you get a massive oversupply, a glut. There's just too much product. As David puts it, we're heading straight for a situation where we're going to produce way more than the market can possibly absorb.
Okay, so that's the story from the field. A flood of supply is coming. Now, let's switch over to the screen and see what Trent Klarenbach's charts were screaming at the exact same time.
Trent spotted a classic, and I mean a very ominous technical pattern forming on the lentil price chart. It's called the head and shoulders. Now for traders, seeing this pattern is a huge red flag. It kind of looks like three peaks, right? The middle one, the head, is the highest. When the price breaks below the neckline of this pattern, it signals a powerful reversal from an uptrend to a downtrend. And this is where it gets really scary. Based on the size of that head and shoulders pattern, the technical price target, what they call the measured move, it points to an absolute collapse. We're talking about a potential drop from around 40–45 cents a pound all the way down to the 12 to 15 cent range. That is a catastrophic fall, and it lines up perfectly with the fundamental story of a massive supply glut.
And this problem isn't just stuck with lentils. The same dangerous mix of bearish fundamentals and technicals is popping up in other key special crops. The dominoes are really starting to fall.
First up, let's talk Canary Seed. The fundamental problem here is something David Nobbs calls a hidden inventory. Basically, for years, farmers stored away old crops. Now, with prices having been so high, all that grain, and some of it is 15 years old, is coming out of the woodwork and just overwhelming the market with unexpected supply.
And then for yellow peas, the problem isn't supply, it's demand. A big geopolitical issue, Chinese tariffs, has basically just wiped out a buyer that accounts for a whopping 50% of the entire market. I mean, you can't just lose half your customer base overnight and not expect prices to absolutely plummet. And here's the kicker. Just like with lentils, Trent Klarenbach's charts for both canary seed and yellow peas are also showing those bearish head and shoulders patterns. So once again, the field and the screen are telling the exact same story. Too much supply, not enough demand, and a price chart that looks like it's about to fall right off a cliff.
Okay, so given this mountain of bearish evidence, what can a farmer actually do about it? Look, this isn't about panicking. It's about shifting your strategy. Our experts laid out a really clear playbook for how to navigate a falling market.
First thing, change how you measure success. Stop focusing on the price per pound and start thinking about your revenue per acre. A huge yield can still be very, very profitable, even at a lower price. Second, you have to recognize that in a sharply falling market, the best price you're going to get is probably today's price. Waiting for a rebound can be a really costly mistake. And third, this is the hardest one of all, take the first loss. It's tough emotionally, but selling for a bit less than you'd hoped is infinitely better than holding on as the market collapses even further.
You know, this quote from Trent Klarenbach really just sums it all up. When the market is in a powerful downtrend, trying to fight it, well, it's a losing game. The smart play is to respect that trend, manage your risk, and protect your capital.
Which kind of leaves us with one last thought to chew on. In these super cyclical commodity markets that swing from boom to bust and back again, maybe the biggest risk isn't the falling price itself. Maybe the real risk is just clinging to the hope that things will magically turn around, instead of making the tough, proactive decisions that all the evidence is demanding.